Hey everybody, a lot of my real estate investing friends have asked me for an update on Seritage Growth Properties, ticker symbol SRG. It's a real estate investment trust that got absolutely crushed during the pandemic and ended up announcing they're going to wind down their operations. It's still going on, so we're going to get into that in just a minute. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So let me go ahead and share my screen and we will get right into it. There's a lot to go over here in a short time. So, as I mentioned, they've been winding down the portfolio. They announced it in October 2022 that their board approved this kind of wind down. If you're not familiar, Seritage owned a portfolio of retail properties that used to be occupied by Sears, and the model was that they were going to gradually redevelop them into modern mixed-use properties, and it would be like a self-funding business model. Well, COVID hit, and it really wasn't a good time to be a retail real estate owner. It really wasn't a good time to be a retail real estate owner when your properties weren't even occupied. They were just kind of construction sites. So really bad time. So they had no choice but to wind down. That was the only way to really preserve some shareholder value. The company has made some substantial progress, but since they announced the winding down process, the stock is down by about 60%. So let's take a look at where things stand right now. So nearly 3 years later, Seritage has wound down most of its portfolio. It owned a lot more properties than it does now at one point. It still owns a total of 7 properties of varying sizes, in addition to 3 that it has under contract to sell and 5 more that is currently under active negotiation on. So in addition to that, Seritage has almost $72 million on its balance sheet, and its term loan, which is to Berkshire Hathaway, that's its only creditor, has been paid down to $200 million. It was well over $1 billion at first. And there is also $70 million worth of preferred stock outstanding on Seritage. So if we add all that up, adding up the assets, so this number is known. $109.8 million is what they expect from the properties that are under contract. From the negotiating properties, they're estimating they're going to get about $181.2 million from those sales. I mentioned the cash on their balance sheet. And for those remaining 7 assets, this is just the midpoint of for each one. They issued a kind of range, like one property will sell between 25 and 30 million. So using the midpoint of those, this is what they could expect to get from their remaining assets. If the market conditions are extremely cooperative, it could be more. If they're not, it could be less. But if we use the midpoint, add all those up, you have $684.3 million. That's a rough estimate of their assets. As I mentioned, they have $200 million in debt, about $70 million in preferred stock. So if we subtract the two, the equity is about $414.3 million. Now, of course, this is a simplification of how much this is worth. For example, when they sell properties, there are fees they have to pay to brokers and things like that. In the meantime, Seritage is paying interest on the $200 million it still owns. It still owes to Berkshire Hathaway. It is still paying dividends on the $70 million of preferred stock that's outstanding. Remember that future sales prices are just an estimate. In addition, just to mention a few other balance sheet items, there's $8.3 million in restricted cash, $7.2 million in tenant receivables, meaning rent that they are expecting to collect, $23 million in payables, things that they have to pay, etc. So it's not just as clear as that back of the napkin calculation. There's a lot of other moving parts. But if we use that estimate of that asset value and the number of shares currently outstanding, it gives us a per share value of $7.36, and that's if everything goes well. The current stock price is $4.28. So if the rest of the wind down goes well, that's quite a bit of upside, but that is a big if at this point. There's a lot that could go wrong in the process. There's no guarantee they're going to sell any of those assets for what they think they are. There's your update on Seritage. Hopefully you found that informative. Please leave me any questions or comments you might have. I'll do my best to answer all of them individually. Thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.